thing. My bad. Sorry.
Got about that.
My bad. Yeah. Well, I only brought it up because the chat. Trust me, I do not want to see that again. Anyways, what is going on, Crypto? Happy Thursday and welcome to City Crypto Live. I am one of your co-hosts, David. We're coming at you from our studio here in the heart of Las Vegas, in City, Nevada, with our daily, only on the weekdays live shows. Before we get into the content, quick disclaimer: nothing that anyone says on this channel should be taken as financial advice. So please, as always, do your own research. That being said, I'd like to introduce you to your other co-host, the Bull, Big Rob. What's up?
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do deep dives when we're not in a bear market. We also do YouTube shorts and Twitter posts and all kinds of other. If you don't want to miss any of our YouTube content, make sure you hit the notification bell. Also, like the video. If you haven't liked the video yet, we'll give you a moment to like the video. We got crypto stackers in here today.
What's up, Forrest?
What's up, Forrest? Also, if you're not subscribed yet, do us a favor. Subscribe. So that way you don't miss anything. Or don't subscribe if you hate us. Do you like us, Steven?
Do I like us?
All right, anyways.
Does Rocco like us? Does Rocco like you?
You know, we put Rocco, we put our producer through the ringer. You know, he comes in here and it's like,
We need to take him out to dinner.
Yeah.
Let's take him out. Take him out to dinner.
I think that's a good idea.
You know what?
Rocco, where do you want to go
deserves
eat at?
McDonald's? All right, perfect. He said happy meal.
He's
at
not
McDonald's.
going to McDonald's.
That's what he said. They got good espresso right here.
So before I jump into it though, I do want to say the bull market's back, baby. Woo, putting on the bull horns. Let's go.
So embarrassing.
You gotta love the cheesy sound effects. All right. Yeah, so we're seeing new all-time highs, or not all-time highs, new local highs in Bitcoin. We touched $24,000 on Bitcoin earlier today. So really excited about that.
I'm more excited about ETH getting 1,800.
Oh
Yeah.
yeah.
So before we get into a call, we do have a special guest coming on our show in about the next 12 to 15 minutes. It's Dan from the Chart Guys. He'll be joining us as a special guest to go over some market, do some TA for us. Also, if you're watching after the fact, we will have timestamps in the video so you can navigate freely. But we do recommend watching it from beginning to end. We're going to be talking some Ethereum, Jerome Powell, and what he thinks about recession. Also, what Biden's plan is to get us out of the recession and to bring more money into the economy. Also, the GDP2 numbers are out. We're going to talk about that as well. And some NFT news to finish off. So with that being said, Robin, roll call.
All right, so roll call. So first in the chat, strictly
Name is Steph
round of applause.
Curry.
Anyways, congratulations for spending time while looking at our thumbnail with nothing on it. Broke Yoshi, second up in here. Robert Salazar, Big Chili Willie. We got Blake, Jason, Why You Loud, Gang, Nordy, Marky Mark. We got Jimmy, Mark. We also got Oliver, K Factor, Hindi, Mobile Sage, Atomic Atom, Bullish King. We got
Big
Servando. Hold on, Servando. Welcome back, Servando. We got Moby, Eric Handcastle, and then we got MOP, and then we got
Big D.
Crypto, aka Forrest, Kyle, and Fino. Rounds it out. 44 people, 60 people in the chat. We're going to open up the club. If you're not familiar with that, hey, you do a couple things good here in Las Vegas. One, cryptocurrency live streaming show. We also do a pretty damn good nightclub scene here. And so to celebrate our milestones, new all-time highs in the viewership, we do like to have a Vegas party and see David's terrible dance moves. So hopefully we get there. Now, what's up, my dude? Nothing? How'd you feel about the market going
There's
on?
a lot going in my mind right now. There's a lot I want to talk about, but I'm trying not to skip steps here.
It's funny, man. You know, this whole talk of the interest rate hike with the Fed supposed to take the steam out of the market, and yet are just adding more steam to the market. The locomotive is going harder. What's the term for a train going faster?
Fast train.
Faster train. Anyways, so let's just you got anything else to add before I jump into the charts here?
No, go ahead. You're good.
Okay, so we're gonna take a deeper look here at the charts here in a little bit with the chart guys, Dan in particular, and so taking a look at Bitcoin, we're at $23,958. We are teetering on this $24,000 mark here, and taking a look back, how did we get here? I know I've referenced this a few times. We've been just taking these steps down, as I like to call them. So, consistent and traded at 40K, then dropped to 30K for a few weeks, and then the 20K region. Are we going to break out of this channel here? Is this trend going to continue? Instead of 20K, is it going to be the 10K channel, 15K channel? I do think we haven't seen the bottom yet, my personal opinion, but I'm not quite as big into analytics. I know, David, did we hit bottom yet? Your personal opinion?
I think so.
You think so? Well, I do think we're in a pro bear market, so I don't see us like rallying up to the 50,000 things like that.
I would say I'm 70-30.
70-30. Cool. So taking a quick look at the traditional markets, Nasdaq and
flip.
Look at this, S&P 500 over 1%, Nasdaq at almost a full percent. So the markets were expecting the 0.75% interest rate hike, and we, because no scary news is good news in Wall Street. So if you follow expectations, the market expects it, you get peace of mind, people get back to trading, all's good and well. And you did get some big numbers in today as far as metrics on the global economy here in the U.S. We have the GDP fell by 0.9%. This is 2 negative growth quarters in the U.S. GDP. So traditionally, I know the White House is pushing back on this statement, but traditionally, 2 negative quarters of GDP equals recession. So they've rebranded what they consider a recession because it doesn't fit their narrative. And going into a midterm election, they don't want to look. They don't want to have that stain on their.
Rocco, pull up my laptop real quick. So this is from Charlie Bilello on Twitter. Okay, this is real GDP, which adjusts for inflation. Okay. Consecutive quarters of negative growth, at least 2 in the history since 1947. Only once have we not gone into a recession. That was in 1947. Every other time we've had at least 2 consecutive negative GDP numbers, we have been in a recession. So what makes this different? Who knows? But apparently, according to like what Robin said,
1947 wasn't that long ago, and
80 years ago.
So exactly. So basically, in the last 80 years, it has been proven time and time again that negative GDP is 1-to-1 correlated, exception of 80 plus years ago, to being in a recession. And so you could argue that this 2020 technically wasn't a recession,
right?
Because it was so short lived. So maybe there's a caveat there. Maybe things have changed.
Fastest bounce back from a recession ever.
Well, you know what? If you print 4 times the amount of money that is in circulation, you literally quadruple it in the span of 2 months. That's what happens. And then all said and done, they ended up 5 timings. Ended up increasing the supply by 5 times.
Quintupling.
Okay. Just think of like a lady having too many kids.
Well, there's a show, I believe, the quintuplets or something.
Yeah. So just to speak on it. So the U.S. economy contracted for the 2nd straight quarter from April to June, hitting a widely accepted rule of thumb for recession. Gross domestic product fell by 0.9% annualized, and this follows a 1.6% decline And then you can kind of see where we were here. And then this 2020 dip here, this was the closure of the lockdowns. So, you know, we've you know
what's interesting though?
You agree we're in a recession?
Hold on, go
right?
back to that. Expand that again. You know what's interesting? Look at Q1. That's January through March. I guess half of March we started locking.
Yeah, exactly.
But you can see we were kind of starting to taper off from Q2 of 2019. Starting to slowly taper down to, I truly believe we were headed for a recession. The Fed started hiking rates back in 2017, 2018. They stopped, and then pandemic happened, and then it kind of threw everything back. And I believe it amplified what would have been a mild recession back in 2018, 2017 into what we're going into now, which according to everyone except the White House, we are in a recession. And technically today with the GDP numbers, it's official.
So Ethereum crossing over the $1,700 range. Where is the local top for Ethereum? You know, I still think $2,200 is, I think, going to be very, very close to what I think the local top is before it pulls down.
I think 2 is the number.
You think 2,000?
I think 2 is the number. Yeah.
Okay.
2 is a big number. And that's playing off the psychological thing, and that's also based off of what we're seeing on, you know, as far as the charts.
Yeah. So, you know, obviously, as long as everything's on track with the upgrade, which it seems to be, fingers crossed. You know, you got to keep fingers crossed when it comes to Ethereum's upgrade. But I mean, at this point, it doesn't seem like it's actually going to have any hiccups or slowdowns. It seems like it's on track. There's only one more test net to finish out, right?
Early.
Yeah.
August 19th.
And so all eyes here, you know, if you've been following our channel, you know, especially with the insight of Forrest as well, and this, our bullish kind of, ideology on the price targets for Ethereum. We were pounding the drum on DCAing, not financial advice, of course, but we were pounding the drum on DCAing on Ethereum when it was around $1,000, even at $900, $1,100. You know, when it was at $1,200, $1,100, you know, people were looking for better buys, and you know, we were routinely saying like, "Hey, man,
you can't get
now is the time." Bro.
That's the thing. You can't get greedy, and you can't try to time the absolute bottom. You're never gonna hit it.
And then so some of the biggest so Ethereum's up 15% for the day. Lido Finance or Lido, how do you pronounce it? Lido or Lido?
I say Lido. I could be wrong.
So up 50% for the day. ETH Classic still pumping up 40% for the last 24 hours. And then some of the biggest losers here.
Look what else is pumping.
Everything's in the green.
Look what else is pumping. Go back. You got Raven Coin.
Ravencoin. You know, Ravencoin is a proof of work.
That's what I'm saying.
Token. Ethereum Classic is a proof of work token. So what you're seeing here is
hash power.
Yeah, you're seeing miners with their graphics cards preparing to swap over. And when you get more mining, you're going to get more volume, more transactions. And obviously, you're going to be pushed to the forefront because you're going to have people just transacting. And volume is key for pumping on, especially through a bear market. Now, that's all I got on my end. Anything else before we
hell no
get into it? All right,
no, let's
go ahead.
Let's go ahead and bring on our guest.
All right,
what's going on, Dan?
Howdy, friends.
How are you?
Thanks for having me.
Hey, our pleasure. Thank you so much for taking the time. Dan, would you mind kind of letting our viewers know a little bit about yourself, what you guys do on your channel, and maybe your story about crypto? A couple minutes.
Sure. So I've been trading for about 12 years at this point. I started 7 years before I got into crypto, and then 2017 happened, and that was a very nice transition into the crypto markets. About 7 years ago, we started the Chart Guys and our YouTube channel, and we focus on education. We put out a ton of free daily content on our YouTube channel. I think we've got 8,000 plus videos at this point. And we do a bunch of live streams and courses, and we run a chat room, and we have paid content in addition to the free YouTube stuff. And so essentially just focusing on technical analysis and charts and navigating markets towards achieving financial independence, which is the goal.
That's awesome, man. So I'm just gonna. By the way, the link to the Chart Guys YouTube channel is in the description of this video. Please make sure you go support the channel. Go and subscribe when we're done with the live show. Also, go follow them on Twitter at Chart Guys. Pretty
Or
straightforward.
if there's anything you want to relay here in the chat, any questions or just comments, just feel free to throw them in there and we'll get to them.
So I got a very important question to ask you, Dan. Are we in a recession?
Honestly, that word doesn't mean a thing to me trading. Now, it means something in the real world. I empathize with people and things like that. But in terms of trading, doesn't mean a thing. I'm going by price action. I'm going by trends. And I know oftentimes that this data, CPI, the numbers that we get talking about inflation, we're looking back in the prior month. GDP, we're looking back in the prior history. The market is forward looking. So we're going to have a bunch of people very confused. Why is the market going up right now after that GDP number that we got yesterday? And when you have that kind of mindset and you don't really understand the workings of the market, it's easy to get confused and be looking in the wrong direction. So I'm sticking right now with daily higher lows that were forming in the S&P 500 and that were forming in a lot of these cryptocurrency names. And I'm going to be bullish as long as those keep forming. Once we lose them, take a step back, reassess. But the short-term momentum for the last couple of weeks is definitely up. And I'm not going to let a word like recession cloud my analysis.
That's it. That's a good point. I mean, you're right. Markets are forward looking. So what you're saying is, we saw a big pump yesterday after the 75 basis point hike. We're seeing, I believe the markets opened red this morning. I don't know if you're on Eastern or Pacific time, but I can't wake up at 5 in the morning to look at the markets. But when I woke up around 7 in the morning, my time, markets were red. And then we just looked at it, 5 minutes ago, and then they turned green. Do you think it's just short-term bullishness? Do you think the markets are saying, hey, we think the Fed's going to pivot? Like, what's kind of your thinking? Because behind every candle is a trader, correct?
Yeah, I think honestly, we just got overly bearish, which we saw in the cryptocurrency space. We got way extreme to the downside. If you look at historical RSI levels, which help us gauge, the amount of weakness and fear that we're seeing. And if you look at the amount of volume that we saw, one of our clues for looking for the bounce was a volume climax, which you often see at tops and bottoms. These things showed me that the market got it overreacted in that direction. Now, if you're going to look out 6-12 months, could you say that we can see another leg down and maybe it didn't overreact? Yes, but at least in the short term, everybody got on one side of the boat. Everybody was on the bear side. And so what you're seeing is that boat flip a bit. And I think a lot to do with the reaction over the last 2 days is, again, a lot of people anticipating a bearish reaction heading into these GDP numbers and heading into tech earnings. We've had pretty much the Super Bowl for earnings season is this week, Tuesday, Wednesday, Thursday, we're still waiting on Apple and Amazon, but we got Google and we got Meta earnings and we got Microsoft. And so I think a lot of people went into these fundamental events saying, we're going to dump and this is going to be the top of the bear market bounce, the bear market rally. And so the last 2 days is squeezing all those people out and showing them, no, you're wrong, and putting them underwater. And so shorts covering is definitely an aspect of this rally on the way up. But every green day that we see from here just creates more space off of our fear lows, and that gives the bulls more space to work with. So the next time that we do see a period of notable consolidation, for me, we just need to establish a base floor. And every time we hit a new fear low, it's almost like, all right, back to the square one. And so the question is, can we see a big enough bounce that the next time we see weekly consolidation, which we'll look at on the chart here in just a moment, the next time we see weekly consolidation, can we hold our prior fear low and start to establish a longer term uptrend?
Now, we had such a massive capitulation, so much sell off when it came to the liquidations of these institutions, particularly Celsius, Three Arrows Capital, and then of course you had Terra Luna. So with all of those assets, they went somewhere. And, some of it, was liquidated, went over the counter, but at some point those did move to order books, and we did see just the market overselling just tremendously, especially from where we were. I mean, we had like an 80% drawdown at one point, or 70% on Bitcoin. From the beginning of the Terra Luna to where we're at. Was it 60? I don't know how the exact numbers, but either way, a huge drawdown. We did get into oversold territory, and I think this is just natural bounce back. And was that the bottom? I don't think anybody truly knows. We can speculate and whatnot. But also, you did make a good point. Really excited to see some of these numbers coming in from Amazon. I think Amazon comes out today or tomorrow, one of these days. But
Today, yeah, and then Apple, I believe, is tomorrow.
yeah. Also with the GDP, one thing to keep in mind, I think a lot of people are throwing out the recession term, but we were at, the GDP was at negative 1.6 last quarter, and so we came in at negative 0.1. So, if you're negative 0.9, excuse me. And so if you were to look at it in comparison, obviously the economy isn't quite as far off from where it was before,
right,
in the negative side. So there are some positives to take from there. And I think that's why we're getting such green days. But
do you now, Dan, before you hop in the charts, I want your opinion on something. Do you think if we do go into a recession, right, you see the economy start contracting, you see unemployment numbers go up, do you think cryptocurrency has a chance to break away from traditional markets and buck the trend essentially? Because would you agree that we are closer to a floor in crypto than we are in the stock market if we are going into a major recession?
That's a good question. I would say, yes, obviously it's possible. Whether it's likely or not, I've got to go with the trend. And the trend is we stay correlated with the broader market. Some of these altcoins that have bounced a lot more significantly than Bitcoin, I think the probability that they have found their bottom is a lot more significant. But it really depends, because if the broader market sees another leg down and correlations stay intact, then yeah, crypto absolutely is going to see another leg down. But I am noticing that there are a lot of places in the broader stock market where, just off the top of my head, the biotech sector and a lot of growth names, they hit their all-time highs way before the S&P 500. They were pulling back in a bear market a lot longer, and their drawdown was much more significant. The growth names were much more in line with crypto, maybe not to the extremes of 80%, but not that far away, 60, 70%. And so I think those names, they have bounced very significantly off of their lows. And I do believe that the probability is higher that those lows are in, because you could have a scenario where if the S&P 500 does see another leg down, and if it lacked follow through, then I think the names that bounced more significantly, again, they've created the cushion of space to work with where they can hold their fear low, even if the broader market drops to a new fear low, as long as it's not, another 15% lower. So for me, it's as simple as looking at the more significant the bounce that is taking place right now, the more of a percentage move that we're seeing, the higher the probability that our bottom is set. And so that's why every green day from here is just, I have a probability needle for me in all of my trades, and it just ticks a little bit higher that the probability is in every green day that we see from here.
Yeah. Also, I've been seeing some analysts saying that that Bitcoin's actually an indicator on what the traditional market's going to do now. And so we saw Bitcoin hit its top late November. I think like the last week of November. Then the S&P was basically the very end of December, the beginning of the year. So that's interesting. I do think we are gonna trade pretty in line with tech-driven stocks, NASDAQ in particular. But I do think at some point we're gonna diverge.
I think we have a real chance of breaking away this cycle. I don't think, cryptocurrency's never been through a recession before. I think whales and maybe even institutions are going to look at an asset like Bitcoin, who has a standard supply that you can't inflate, and they can look at it. I'm not saying I agree with this, but they can look at it and say, we can manipulate this, right? We know how sensitive crypto investors are to news, and, this person bought that. Elon Musk sends out a tweet, and next thing you know, Dogecoin is up 60%. So I think it's possible. I don't think it's very probable, but definitely possible. So anyways, Dan, you got some charts to show us, my friend? Please feel free. Go ahead. We're excited.
Sure. Just a couple more notes to talk about. One other thing that increases the probability for me, this is the S&P 500. We'll look at that. But one of the things that increases the probability for me is knowing that Tesla selling such a large position was a part of the capitulation that was taking place in the crypto space. And so for me, as soon as we got that information, it increased probability that a bottom would be set, because that was definitely magnifying fear and magnifying the amount of excess supply hitting the market and just taking out bids and then leading to that cascade effect. So that's definitely an important factor for me as well. So here we got the S&P 500. I always start with the broader stock market. And we can certainly say that, again, our correlation with the broader stock market and Bitcoin has been only strengthening over the last year and a half or so. And so it's definitely the baseline of my analysis is, okay, what's the broader stock market doing? What's the most likely scenario there? And then comparing Bitcoin to that, and then comparing altcoins to Bitcoin is essentially how I start every day at the computer. So we can see this is the pullback that we saw, just a little daily bull flag, but that was leading up. So we get this big old bounce, and we have some profit taking into this week, which is the unknown events, all these earnings and GDP and FOMC. And we see, no red flags on that pullback. It definitely is healthy. And I always want to see EMA 12 support hold, which is what this red line is. And we now have this continuation. So we are currently at the highest levels that we've seen since June 9th. And I always like to look back at that because I can visualize, okay, anybody that's gone bearish in this market is underwater in the last 6 weeks. So obviously the goal for the bulls is to put as many bears underwater as possible. So the next major hurdle here is the high from this bounce back in May. That's the weekly lower high level. So if we zoom out to the weekly chart, I would still say that we are in a downtrend. And so I'm just viewing this as the all-time high, then some lower highs and lower lows. We had a big old bounce in there, another lower high, lower low. And so I'm viewing this all as the same bounce. And if you look at the NASDAQ, it's a little bit more clear as far as just the straight bounce off the low. And so we're heading towards these key resistances for both the NASDAQ and the S&P 500. If we reject, it is just a weekly lower high and the downtrend remains intact. And honestly, at this point, I'll be watching for a potential inverse head and shoulders to see if the bulls can pull off the trend change. And that's what I was talking about, where, the more we bounce here, the more cushion we have, the more space we have to hold the low next time we pull back to try and shape up a weekly trend change. So we've got a daily trend change for the bulls, which is just a series of higher lows and higher highs. Keep it simple. And so now the question is, can we then change into a weekly trend change? Well, first we've got to top out, which we have not done yet. So we're watching that resistance. If we break above that resistance, we've got even more space for that trend change attempt. So as far as the short-term action, the highs from the bounce back at the end of May, start of June are definitely very important to us. And just if we compare Bitcoin to that, we can see Bitcoin is not really close to where we bounced and topped out at that point in time. That was all the way back up at 32.3. So we would need another, 35% or so to get back to those levels. So keeping that in mind as well, for me, it's a lot more likely that Bitcoin sets a lower high here. And at this point, this is a bear flag to me. I definitely need a lot more follow through if we're going to create the space and create the cushion to try and shape up a weekly trend change. One chart that I look at that shows correlation. I always want to know who's stronger. Are stocks stronger? Is Bitcoin stronger? If you type in on TradingView BTC USD divided by NAS 100 USD, this is showing me Bitcoin comparative to the NASDAQ. And on the daily time frame back here, we were sideways for a long period of time, which essentially just showed us we're doing exactly what the NASDAQ is doing. On this, we had a period there where that was the same. We were tightening up and just sideways. We're doing exactly what the NASDAQ is doing. And this is where Bitcoin really accelerated to the downside. And that was the capitulation flush that was taking place. And so we weakened significantly comparative to the NASDAQ. And so now we're trying to shift the momentum to show relative strength. And if Bitcoin can be showing me relative strength to the NASDAQ, that's showing me a risk on mindset in markets. And I'm watching for it in other places as well. As I mentioned, just briefly here, the biotech sector, which again, looking at the weekly time frame, just absolutely trashed from its highs. Definitely, if you cover the chart, you could say that's a cryptocurrency almost, 65% drop. But at this point in time, we're now up 37% off the low. So again, that to me shows just a little bit of risk on appetite. So I'm watching to see, does that shape up with Bitcoin as well?
I like that you look at multiple time frames too. think that's very important.
Oh, that is key, because if you are not, I mean, you need to be tapped in. How I start every morning is starting on the longer term time frame and then zooming in from there. So I remind myself, okay, Bitcoin's in a weekly downtrend. Can't get overly bullish, can't get ahead of myself. There's a lot of work that needs to be done on the longer term time frames. Then I zoom in. Okay, but we are seeing a big bull move and we're testing the recent high. So there's definitely short-term strength and longer-term weakness. And so people newer to markets, that's really where they can easily get lost. What do you mean? I could be bearish on the weekly and bullish on the daily, and that confuses a lot of people, but there's obviously different things happening on those different time frames. And it's very important over time, with experience and with looking at 1,000, 2,000 charts, to develop an understanding of how these time frames overlap with each other and interact with each other. Because there's a lot of times where you can get a bull break on one time frame, but if you zoom out, it's just a lower high and a rejection on a longer term time frame. So I am always cycling through time frames and looking for clarity. The stock market starts the open on the day. I start on the 5-minute time frame. We had a nice falling wedge this morning that certainly followed through. And then eventually I just zoom out and I go to the 15-minute. Okay, little 15-minute bull flag. I'm always just looking for where the clarity is.
And you brought up a good point. When I was looking at the charts yesterday for Bitcoin on the 1 hour time frame, we were in a bull flag, but in the daily time frame, we were in a bear flag. And if you measure the width of those flags, the shorter time frame moved to the upside. The break to the upside fits perfectly into the larger time frame as far as the bear flag going the opposite way. So that's very important. Now, I want to ask you a question, Dan. Is there a level of resistance that you would like to see Bitcoin cross and hold above for you to feel comfortable saying, all right, the bottom is in, or we're going back in a bull trend? Is there a level? Is there a couple levels?
Or do you just not even entertain those facts and you're just, as so much in the moment, you could really care less where the, technical bottom would, if it's in or not?
Definitely in the moment a lot, but I do care about the bigger picture. And honestly, for me, if we don't break this 32.3 level, it is just a weekly lower high in a downtrend. And so I am going to be a bit cautious and skeptical. I use this EMA 12 a lot. Like I mentioned, I like playing, off of it as support if it aligns with other factors. And so if I'm a bear, I want to see Bitcoin reject from this weekly EMA 12, and I want to see the shorter term time frame showing me it's overbought. I want to see the daily RSI up above 70 for the first time on this bounce to show it's a bit overextended. That would make me more comfortable looking for a temporary exhaustion top on this bounce. But honestly, if we don't break 32.3, if I'm going to entertain that a bottom is set, we must confirm the weekly trend change with the higher low and higher high, because that will show me sustained bull buying. That will show me sustained pressure being put on shorts. But again, this is where the time frames come into play, because we can bounce to 28. We can pull back and hold a higher low at 22, and then we can confirm the weekly trend change. And all you do from there is you zoom out and remind yourself, well, okay, now we have a monthly bounce underway, but anything under 48.2 is just a monthly lower high. So once you're in a downtrend on every time frame, it takes a long time to regain the trends on all those time frames. We've got the daily, we need the weekly. Once we get the weekly, we're going to need the monthly. So I'm not going to wait until there's a monthly uptrend before I have that confidence. We've been playing that capitulation flush because I love oversold bounces, but it's definitely one step at a time and a long, slow road to recover from a downtrend on every time frame to try and gain an uptrend on every time frame.
Yeah, and I feel like and I've been guilty of this too, but especially in the crypto market, we're so like go. We want it now. We want to see a all-time highs again. But I feel like, everything you're saying is true. It takes time to regain those levels. Now, I want to pivot to what are your thoughts on, the big pump we've seen from Ethereum from 850 to over 120%, sitting a little over 1,700. Do you think this is a sustained move? Do you think, what are your kind of overall thoughts?
Or is there going to be a flippening? Is Ethereum going to overtake Bitcoin on, I don't think it's going to happen anytime soon. But
I think its best chance was 2017 for that, but we'll see. So for me, I've been very impressed with this bounce. Ethereum was my main horse for the oversold capitulation bounce. And I just, I don't know why, but I just love when the sky is falling and we are free fall in a drop, as long as it's not some little coin, some little altcoin, if it's, Big Daddy and some of our major names, then that's when I love to get aggressive. And so once 1,000 broke, that's when I was establishing a trade, and my target was weekly EMA 12. And so I did exit all of that swing trade from, an average under 1,000 to maybe exiting in the upper 1,500s. And so right now, I've got my long-term no touch position, but my swing trade position, I'm all cash. So I'm looking at this saying, all right, well, I kind of want to get back into a position. I'm being patient. I've been very impressed with this bounce. And I look at ETH BTC, which again is a comparison that shows us who's stronger, Bitcoin or Ethereum. And this weekly bounce is very far exceeding what I was hoping for in terms of Ethereum just smashing Bitcoin in terms of the amount of gains we've seen off of that low. I mean, we're almost back to where we were back in April in terms of Ethereum being as strong, relatively speaking. We can say that if, Ethereum sees a little bit more upside here, it's going to be as strong, relatively speaking, to Bitcoin that we've seen in the entire year. We're going to be up in that range. And so that just shows me a lot more significant dip buying in Ethereum. And again, I talk about the space being created. Well, you look at Ethereum at this point, and we can pull back 50% from here and still just be looking for that weekly higher low to set up a trend change. So there is a ton of cushion. And if this is one of the examples where the more follow through you get on the bounce, the more likely a bottom is being set. And so, if we go up towards 2,000 and beyond, that's definitely going to be very convincing for me that the bottom will be set. I watch retracement size, Fibonacci retracements to gauge things. And if the ideal scenario here on a bounce, roughly speaking, the way that I use these is I say, if we can't get over 382 retracement, it keeps a bear flag on the table. If we see a 50% retracement or more, we then look for an equilibrium. And so now that we're seeing this short-term strength and new highs, that's what I'm keeping an eye out for. Can we see a big enough bounce? Because one of the most common patterns you see in markets is a breakout or a breakdown and then a significant retracement, and then you just tighten up and things get slow and boring, but you tighten up and then you eventually get the breakout or the breakdown. And so I'm watching, can we get a big enough bounce to set up the scenario where you get the extreme dump, you get the very significant bounce, and do we now tighten up for a month plus? And I still need a bit more upside. I need 2,000 plus for that to then become the most likely scenario for me, but it is something I'm keeping an eye out for.
Okay, now, and of course, none of this is financial advice, but if your entry point on Ethereum, let's say, was about $1,200, would you say 1,700 might be a good time to take some profit, ladder out a little bit, or is there a number if you were in that position, and your average buy was about $1,200 on Ethereum, would you be looking to take profits at certain levels, or is that you kind of just decide as you go?
So that definitely depends on the individual and the goals. There was a time where I was trading and I was super aggressive back in 2017, and I was, trying to do as much as I could and take as much advantage of that opportunity as possible. And so if you're in that mindset, then you're definitely, holding on tight and hoping you nailed the bottom. But if not, I love being risk-free. If you're in at 12 and you sell half at 17, you can't lose. You cannot lose money. You put your stop under the low if you want. And if that's the bottom, then you nailed it and you got half a position. And if it's not, then you stop out, don't lose $1, and then you can reassess the situation from there. So that's how I very often approach day trading. Obviously a much shorter term mindset, but that's one style as well. At a minimum, again, we haven't seen a weekly trend change yet. We have bounced over 100% off the lows. I love the positive outlook on things. There's two ways you could do it. If you sell a partial position and it keeps going up, you can choose in your mind, you can have the mindset of, darn, I did it wrong. I should have had my whole position. I shouldn't, you could beat yourself up. You can also take the positive side. If you sell a partial position and it pulls back, great. I sold part of my position. I've got more capital to perhaps buy the dip at a lower price. And if it keeps going up, you say, great, I kept half of my position. I'm still making more money than I had yesterday. And so I think that as far as trading is concerned, it's very important to develop that kind of mindset to look on the bright side of things as opposed to always being negative, because you're never going to nail the top and the bottom. And so one major aspect of my trading that I've added over the last 5+ years is scaling in and out and being okay not nailing the top and the bottom, because you're not going to nail the top and the bottom.
Have you ever nailed the top or a bottom? Be honest.
Yeah, absolutely. when you take 5,000 trades, you're gonna nail the top and the bottom. Absolutely.
But the odds are low.
It's not to be expected. Definitely the minority.
So question, so just on the basic fundamentals on Ethereum, are you really bullish on it as being the smart contract leader, the essential competition as far as utility to Bitcoin? Or do you kind of keep an open mind that maybe another layer one, maybe like Avalanche or maybe Algorand or Binance Smart Chain or one of these ones will give it a run for its money? I'm just kind of curious on how you feel about just Ethereum in general outside of the chart. Are you super bullish on it long term, or?
It's extremely hard for me to go outside of it because I've been training myself for 12 years to not do that. But
okay.
I can say that the speed at which this is changing, the rapid rate of technology change, absolutely, it could be dethroned and the next best thing can come along and make it a lot less popular. But for me, I'm just going to continue watching its market cap, its dollar volume that it's trading, its relative strength against Bitcoin, and that's going to determine whether I'm bullish or bearish on it. You could have Ethereum solve whatever greatest problem, but if the price isn't reacting to it, that's price was what matters to me. That's why I'm playing this game and clicking these. So yeah, it's great. Revolution changed the world and all that. I'm absolutely on board with the narrative. But the most important thing for me in playing this game is what the numbers on the screen are doing. And so that's always the baseline for me to determine whether you're bearish something. And my personal opinion on the fundamentals matter way less.
I love how you make everything sound so simple. Clicking. I love that. So I have a very, very important question. Okay, what are your thoughts on the Raiders, the Las Vegas Raiders?
Stop it, man.
Well, I'm a Patriots guy, so I remember.
You
Was that
burned
the
us?
Snow Bowl? Was that the Raiders? That was the Raiders. That was
Robin's the Raiders
Vegas.
guy.
Yeah, I'm the big Raiders guy here.
I'm surprised he's not wearing Raiders gear today. Usually, 5 out of 5 days he wears Raiders gear, so it's a special day, so he didn't wear it.
It's laundry day today. So.
Laundry day. We also have a super chat from one of our members. Said, "Great content, Dan. Hope to see you on the stream again." We share that sentiment with our community. Dan, is there anything else you wanted to talk about? We know you're a busy man. We kind of want to let you. Is there anything you want to leave us with? Any parting thoughts or anything you got going on over there and in your space and the chart guys?
Establish trade game plans. Use a stop loss. You have to be able to manage your risk. Everybody bag holds once, hopefully once. Get that sick feeling to your stomach. You want to feel it again. Stop losses can alleviate that. Every time I put a stop loss in, I know exactly how much I will lose, and I accept it fully. There's no crushing feeling. As soon as I place that trade, I already assume that I lost, and it's this much money, and I know in advance. So use that stop loss. Come on by the Chart Guys YouTube channel. Free content. Put out crypto videos maybe 3 days a week, but stock market videos 4 days a week, and those are certainly relevant with the correlation and a whole bunch of stuff about trading psychology and all that. So come on down.
That's amazing. Yes, guys, please go support Dan. Go support the Chart Guys. The description or the YouTube link is in the description of this video. Also, go follow them on Twitter at Chart Guys. And Dan, we truly had a pleasure having you on our show. We hope you enjoyed your time here with us as well, because we absolutely loved it. And we would love to have you back on the show sometime in the future. Yeah, so on behalf of myself.
Or if you want some Raiders perspective,
No.
you
do
hit
not
me
want
up, man.
You do not want. Trust me on this one, Dan. In all seriousness,
I appreciate you guys having me out.
Hey, thank you so much
man.
again. We
gotta
appreciate
do it again, man. Thank you so much.
Yeah, thank you. We'll see you next time.
Have a good one.
Take care.
Later. Patriots fan here. Yeah. Woo.
Yeah, I know you're sour about that. Hate the Raiders.
No, but that's a long time ago. No.
Yeah, that was some great content, man.
Yeah, man.
Yeah, seriously, guys. We're working on bringing a lot of guests to the show. So all we ask of you as our community is to support these people that come on our show, take their time away. They don't ask anything in return from us, and so at least we can do is support them and their journey and their channel. So please make sure you go do that when you have a second. Go support Dan, the Chart Guys. Follow them on YouTube and Twitter. And yeah. So with that being said, also to all the new people that are in the chat today, welcome. Whether you're fans of the Chart Guys or you just found us somehow because YouTube recommended us finally.
Or if you're new, make sure you hit that like button.
Yeah.
So that way we can get some more people up in here.
That's right. All right. Let's roll on into the next segment of our show, which is our hot take.
It's hot.
All right. We will open up the club, I promise. We'll open up the club after the hot take, all right? So first I want to talk about Jerome Powell, okay? So our hot take is going to be based off of the economy as a whole, and obviously we're going to tie it into crypto. But the first video I want to show, this is Chair of the Federal Reserve, Jerome, a.k.a. Jay Powell, JP, talking about his remarks after the FOMC meeting and what he had to say. So we're going to watch this and we're going to come back and we're going to talk about it.
At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 2.25 to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings. While another unusually large increase could be appropriate at our next meeting, that is a decision that will depend on the data we get between now and then. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. Our overarching focus is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer-run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions. But such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
All right.
So feel like the chat is spoken, man. Let's do it before we get into it. Let's open up the club, man. We have 74,000 people, right?
I wonder if people watching this have never seen our channel. Is there a guy in the seat here? Man. You know, big shout out to our community. We might be small, but we're growing. We're strong and loud enough to stop our show to open up the club for you guys. So we love you. All right, Jay Powell. Okay, was that video where he talked about rate hikes at the size possible, but we're gonna have to look at data? A lot of people took that as they're starting to go from hawkish to dovish. Was that your sentiment after watching him speak, Robin? Or like what's kind of if you were to project
he said
forward,
on there, don't be surprised if they bring the pain the next one, right? I mean, essentially, in bureaucratic terminology, you know, he's basically saying, don't be surprised if we do another, looks like 75 basis point, 50 basis point, who knows, maybe a full percent. If the numbers are unfavorable in the next month and a half, or let me see when their next meeting is. So
the Fed meeting?
I know they're taking a month
September.
off, so it's going to be in September. We have on the calendar, I'll pull it here. So September 21st. So a little less than 2 months from now. So by then you're going to have some more inflation data.
You're going to have the GDP numbers get revised,
Yeah.
right? They get revised twice. So end of September, well, I guess we're closer. But
So yeah, you know, I truly do not believe inflation is going to significantly retrace in the next 2 months. Now,
hell no. I mean, gas is already going back up.
Could we see a low 8%, maybe a high 7%? I think that's best case scenario, honestly. And honestly, it wouldn't even surprise me if we print a full 10% next month. I mean, we went.
Yeah, no, July prices were down in July. Gas prices were down in the better half of July. I would say a majority.
I don't know, man. I'm telling you.
Yeah, from $5.60-70 here in Vegas,
we are
came down.
less than 1% away. I'm done with it. We're less than 1% away from the 10% mark. Less than 1%. And so we went just a few months ago, we were at 6. Now we're at 9.1, right?
Yeah.
So in the course of 3 months, we went from 6 to 9.1. I do not think it's out of the realm of possibilities that we go up 0.9%. And so if that happened, you best believe you're going to be getting a minimum of 0.75. Minimum. And
if we get to double digits, we're seeing more than 75. Like here's the important thing.
But
too.
it isn't their target range 3.5, and so we're at 2.5 technically.
3 to 3.5.
So
No, I'm not saying cumulatively. I'm saying at the next one. Like if September rolls around and we're in double digits,
okay,
we're going to see.
How about here's the thing: if we keep moving, and Wall Street doesn't significantly pull back, Wall Street just stays slightly green, doesn't go deeper into a recession, the economy doesn't slow down. The essential roadmap or game plan when it comes to the Fed with introducing these higher interest rates is to take steam out of the market. But yet, at this moment, and I know these are lagging indicators, and you increase the interest rate now and you don't see it for a couple of months, but come August, or come September, when they raise the rate, when they have to go, have their next meeting, if there is still no steam out of the market, I mean, your game plan to take steam out of the market, you gotta go hard, man. And so I truly believe that we ain't gonna be under 8%, in my opinion. Maybe I'm wrong.
By September?
By September. I think 8.5, 8, but wouldn't be surprised if it's a double digit. I mean, we printed a lot of money, man. And it takes a while for it to work.
It's shrinking, although be it by a little more than 1/4%.
Oh, here's the thing. Now everyone keeps saying, "Hey, the job market is so strong." What happens with the gas prices, with the supply chain, if it stays comparable to where it is now, and the job market catches up? And so now you have all of those factors that we've been dealing with, and then you compound that with a struggling, employment rate. We did see the unemployment rate rise, albeit it was not so much. It went from like 3.4 to 3.6, but there are less jobs now than there were last month, and perhaps we see a tick up again and a tick up again. And what happens if you come in November and unemployment is up over 5%? And the supply chain is still struggling, and the gas prices aren't there, and you can't even afford to buy a house because of the interest rates. And so just be very weary. I know right
That
now
would be
the
called
sentiment.
stagflation.
I know right now it may look like the bottom was in. It's nothing but reversal, but proceed with caution because outside of the job market and maybe consumer spending, everything else is indicating that we are going to see lower lows in every market, with the exception of maybe gas. And
I don't know, man. I think I'm starting to believe the crypto bottom is in. That's just my personal opinion. I could be wrong. I hope I'm. Here's a beautiful thing about being in crypto and loving crypto is if I'm right, great, my portfolio grows. If I'm wrong, great, I'll just buy more at lower prices. So either way, it's a win-win for me. All right, I want to show one more Jerome Powell video, and then I'm going to talk about what Joe Biden said during his press conference today and what his plan, what our White House's plan is for the economy and inflation. Okay, so here we go. Jerome Powell talking about whether the U.S. is in a recession or not.
I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market. And it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So
it's funny that
I don't
that
think
dude.
the US
It's
This
funny.
is such BS. Go ahead.
You know
go
what's
ahead.
funny
Go
is
ahead.
that dude is talking about higher salaries. Of course, people have higher salaries.
But here's the-
inflation
no, no,
is
no.
out of control.
No,
you
no.
have to pay people more money.
It's not. It's not even that. The real wage growth is not. It's not up. When you take into account inflation, people are not making more money. They're not. They're not. Businesses are making more money because they're able to charge more for their products and services. The real wage growth is not there.
So the employer or the employee that was barely getting by, could barely make rent, that was working a suboptimal job as far as your hourly pay, in comparison to just getting by, that person can no longer afford to work at that job. And so what do they have to do? So what do they have to do? They leave that job and they go somewhere else. And because the job market is heated and everyone's competing for employees, you have to offer more competitive rates. And if you're making more money, as far as your income, how much gross income your business has, for the simple fact that you're charging more for everything because you have to pay more for everything. In turn, your profit margins increase a little bit, or at least the amount of cash on hand increases in comparison to what your salary used to be for all of your employees. And so basically, you have more money to pay your employees. And so if you need employees and you're in a dire situation that you need to hire ASAP, you have employees that are leaving their old jobs because they don't make enough money. And then these workers are going in front of other businesses that have more capital and that can pay more. So essentially, this is just a byproduct of inflation. This is the natural recourse. When you have rapid inflation, you're going to have a rapid rise in salary and people's wages.
But
it's just a natural correlation.
I know, but it's not happening.
I'm not saying it's one for one. I'm not saying.
I know, but what they're telling us, what the politicians and the Fed's telling us, is employment's good. People wages are going up. Who put it in the chat?
That's because
9.1 inflation, 3% wage growth.
It's because these guys,
they're not making more money.
It's like if you are a manager, we come from the restaurant world. If you're a manager and say you're losing money and you go in front of the owner or whatever it is, and they're like, hey man, we ain't making enough money, man. What's going on? What do you do as a manager? When you're in a position of power and you're in charge of something, what do? You point to all the positives. Like, well, our scores are up, the reviews, the Yelp reviews, this, that, and you can point to all the metrics. That's what people do. And so it's just normal. It's the normal psychology for someone that's in a position of power running a corporation or a branch of government. And so you have Jerome Powell here. Obviously, everything is underwater. I mean, we're in a recession. You can deny it all you want. You have inflation out of control, and we are literally on the precipice of just some kind of economic collapse. Whether or not you want to call it a bubble, whatever the hell you want to call it. Either way, we're on the cusp there. Now, will we get there? Who knows? But so this guy, a lot of this falls on his shoulders. A lot of the reasons that we were even in this position was because of the money printing and the policies that this man enacted. And so now he's front and center on stage, literally. And so his reputation's on the line. What do you think he's going to do? He's not going to be like, hey, man, I screwed up and it ain't going to get no better. Like, he's not going to say that. So in turn, he's like, what good numbers do we have? And then he's like, oh, yeah, salaries are up. Wages are up. And we ain't in no recession. Like, that's why you're hearing this, because what else is he supposed to say? Just say, I suck? You get it, man. And so take it with a grain of salt, and unfortunately, there's a lot of people digesting this information and taking it at face value for what's said. And they're like, yeah, you know what? There is no trouble brewing. There is no choppy waters here. Everything is fine and dandy. The Fed has it all under control. And you know what? We're not in a recession and things are about to bounce back. Wall Street's green today. And that's right now the unfortunate psychology of a lot of people. And, if you just stop denying what's in front of you and the facts, and then pivot and deal with it.
Here's the problem, okay? So Jerome Powell's come out and said the federal funds rate between 2.25 and 2.5 is considered neutral, okay? Anything above that, you're constricting the economy. Anything below that, it's quantitative easing and you're expanding the economy. When you're blowing a balloon, you're setting up a birthday party for your kid, Robin, and you're blowing up all the balloons. You want to get the balloon as big as possible without popping it. Once you feel like you're stretching it to the limit, aren't you going to stop? Aren't you going to stop? Go ahead and answer the question.
I mean, yeah.
Yes,
yeah.
If you're not trying to pop it. So what I don't understand is when you printed all that money and you printed all those central bank reserves and you bought all those mortgage-backed securities and you quantitative easing and you quadrupled the money supply, are you telling me that you were so stupid that you didn't realize the implications it would have a few years from that moment? And at that point, what you should have been doing is raising the interest level slowly, quarter percent, until you got to your neutral level. Because you can't tell me, Jerome Powell, that you didn't think this would happen. Look at history.
Just look at
what history has shown.
Look at the local history of just your own administration. It was only 6 to 8 months ago that Jerome Powell and Janet Yellen were sitting here of repeating in an echo chamber.
Transitory.
And you denied what was literally in your face, basic facts that people could identify, and you tried to sway the public to believe this wasn't a problem. This is exactly what we're seeing now. You have a problem right in front of you, face value, with facts laid out, and you're trying to convince the public that this is not an issue. This is literally the same thing. Like, no different. Literally the same exact thing. Oh, we don't have a problem here. Transitory. No inflation. Don't worry about it. Now you have him up there. There's no recession. Good job market. Don't worry about it. Everything's good.
I'm telling you, man. They are leading people into the slaughterhouse. That is literally what they're doing. And that is why it is so important. I know it's a saying that people say all the time, do your own research, but it's so true. Get different people's perspectives, get different people's opinions, and essentially do your own research. And it's so easy to see. And the simple fact of the matter is, when they saw the economy ballooning and getting ready to pop, they should have slowly raised the interest rates to get to that neutral level. And now what we would have seen happen, we probably wouldn't have seen inflation where it's at now. 9%. We still would have seen inflation because of geopolitical issues, but we wouldn't have seen it at 9%. And guess what? If you do, now you're already at your neutral baseline level. Now you don't have to go 75, 100 basis points. You can go 25 again and another 50 or 25, but they chose not to, and they refuse to take accountability for their actions. And now we're all stuck in here in a shitstorm of global macroeconomy. So thank you for that. Also, Joe Biden comes out today, and his idea of fixing the economy is to raise taxes on corporations. The one thing you have to fall back on, which is job numbers. What do you think corporations are going to do when you raise their taxes? Are they going to take it out of their CEO salary? No. Are they going to take it out of the bottom line? No. They're going to lay people off. So you're essentially, you're cheddar bobbing yourself. You're shooting yourself in the foot or wherever else he shot himself.
Cheddar bob.
Yeah. No, like seriously. The one thing you have to stand on is unemployment. Unemployment's good. Well, guess what? You raise taxes on corporations in a recession, they're going to lay people off. And what are you going to say then? Then what are you going to say? It's an absolute joke. I don't know. Like, if I was a president, I understand the president doesn't have time to look at the markets himself. He's got advisors. Fire your advisors. They led you down the wrong path. Take accountability. Fire them. Maybe you'll have a chance of getting reelected. All right.
No, that dude ain't getting reelected.
You ready to move on, Rob, to some crypto?
For sure.
Talking points. Let's go. Got him. Feel bad for our kids, too. If you got any kids in the chat, put a 1 if you got kids. We'll have a little moment of silence for our kids and what they got to deal with in 15, 20 years.
Hey, moment of silence for our kids.
Well, what they got to deal with in the future.
Rest in peace, kids.
No, that's not. Okay, so when I was one of the restaurants I used to work at, when I had a really bad, like an assistant, a busser, I would say, let's have a moment of silence for our guests tonight who are not going to get the service they deserve because my busser sucks. Anyway, so that's just what I was thinking about. All right, let's talk some ETH news. Ethereum devs finalized the merge testnet details as ETH surges 14%. The latest proof of stake testnet transition will be on the Gurley testnet, which is set to go between August 6th and 12th. Another date we've seen is the 19th of August. So the Gurley version of the beacon chain is called Praetor, and it will be merged with the testnet, again, between August 6th and 12th in the upgrade called Paris. It's so hard to keep track of all these names. Before that happens, a prior upgrade called Bellatrix needs to occur to prepare Praetor for the merge of Gurley. That was kind of fun. And then to piggyback off that, Vitalik Buterin says the merge is not priced in as investor promises to fork Ethereum. ETH co-founder Vitalik Buterin argued that the merge is not priced in not only in market terms, but also in psychological narrative terms. Buterin claimed that some people still think that the much touted proof of stake is merely, quote, a noise, and that most people believe it is not going anywhere. Ethereum's 10th shadow fork went into effect on Tuesday, 26 hours ahead of schedule. So they are ahead of schedule, which is extremely shocking for Ethereum and their track record of always being behind schedule. Chandler Guo, which is a well-known miner, angel investor, and advisor in Bitcoin and ETH startups, apparently he ain't with this proof of stake, and he aims to fork Ethereum as the chain prepares to transition to proof of stake. So another version of Ethereum stays on proof of work. So he's ETH will fork. This is his Twitter. ETH will fork. ETH POS versus ETH POW. So Robin, do you think Vitalik's right? Do you think is the merge not priced in yet? And let's start with in terms of the markets.
It wasn't priced in 2 weeks ago.
You think 1,700 is priced in?
It's now getting priced in. This is literally the movement we're seeing. Why is Ethereum pumping harder than Bitcoin? For the simple fact that people are anticipating the run-up of the merge. And so this is literally the definition of priced in. When an asset outperforms the market for whatever reason, is pumping it, and for this reason, it's the merge. So literally baked in. Now, perhaps he's in reference to, a couple weeks ago. But hey, I'm telling you, man, nothing but I'm still super bullish. I know we talked about exit positions. I do think $2,000 on Ethereum is, I still think, very likely. And as I mentioned, I honestly, I'm probably not going to be able to time it perfectly, whatever. But I am happy with a 2.5x, whatever it is. $2,000 is a good short-term little swing for me. In the span of 3 weeks, 4 weeks, whatever it was. So,
I'm a little more active in trading and getting in and out. So I sold one of my Ethereums yesterday at about $1,650. And the idea is just to keep it in stables until we see a small leg down, and I'm looking to get back in around 1,400. So I'm not selling because I don't believe it. I'm just selling to try to accumulate more Ethereum. Now, this whole fork thing, you think, and I know ETH has been forked before, right? You have ETH Classic. Do you think someone, right, with this Chandler Guo guy, with the pool he has and his stature and the amount of money, you think there's a chance that miners will go to the new fork and ETH proof of work will...
There's no fork.
What do you mean?
The merge.
No. Did this guy talking about forking ETH?
He's going to fork ETH?
Yes.
Well, he's not going to accomplish anything.
Aims to fork Ethereum as a chain prepares some
So
transition.
essentially, so when someone outside of the dev team decide to quote unquote fork, all they're doing is copying the chain, the code, and then just
try to bring the miners over.
Yeah, and then so what you do, if you're not familiar with how an outside party forks, basically they just copy the chain, put a new coin logo, new ticker symbol, and then that's it. And then in turn, every address that currently holds Ethereum now holds Ethereum and the forked Ethereum. And then from that point, in that person's ideal mind, that forked chain would become the dominant chain, and people would use that and transact on it. And then conversely, the users on the original fork or on the original chain essentially would just keep doing, would slowly tick down. Then that one would be the go-to Ethereum. It's not going to happen. It ain't going to happen.
It ain't going to happen?
It ain't going to happen.
Zero chance?
I don't want to say zero, but you know what? I think, at the end of the day, people identify with Vitalik Buterin, and everyone knows because he already forked it once before at ETH Classic. And if there was ever a time to split away from Vitalik, that it was then. And so
he's too big now.
And so everyone knows this is the real Ethereum that's going to go to the merge. And if someone wants to make a copy of it and try to freaking airdrop you a new Ethereum wallet address with the fork tokens,
like they did with Bitcoin Cash.
Cool. Yeah. You know what? Will it even have a market for it? Will it instantly dump? Will there be any value in the first place?
Well, institutions aren't going to go into the forked ETH. Right.
Yeah, and so for one, you can fork it all you want. We can fork a Bitcoin right now. We can make an exact copy, and you have to go through the process of getting liquidity. So you have to have all the exchanges accept it, and then from that point forward, is it a security? Is it obviously there's somebody behind it, so. Right. There's all kinds of roadblocks ahead. So theoretically, super easy to fork, just copy the code. But the issue is moving forward and getting it to be adopted and accepted. That's a lot more difficult. And in the past, when you saw the forks of like Bitcoin with Bitcoin Cash, you had such prominent figures in the Bitcoin community that they were almost successful with forking Bitcoin into Bitcoin Cash. It was pretty close, honestly. It was such a big debate. It got so much publicity that when they airdropped, or when they did fork and people had these tokens, there was a large community behind actually trying to make it work and be successful and become more dominant than Bitcoin. However, that never worked. And then the fork of the fork got forked, and that's where you got Bitcoin SV. And so for that even delegitimized it even more.
Wait, but then SV was a spoon of Bitcoin Cash.
Spork. Yeah. So I think it's nonsense at this point. I think people have associated ETH with the ETH merge. They associate Vitalik with ETH. That's the direction it's going. Fork it if you want. You're probably not even gonna be able to create any value. I doubt it. I don't see anybody listing it. I don't see the exchange listing it. I think if it does launch with any value, it's gonna only be traded on DEXs. Maybe, a couple of smaller exchanges that offer meme coins will offer it. It'll probably quickly bleed any value out of it, because if you airdrop it to everybody, they're going to be like, oh, you airdrop me this crap? I don't want it. Well, let me just sell it. And then that is just going to tank the price. So if it comes out at $2,500, whoever the hell is offering it, whatever small order books they have will instantly be cleared, and you're going to see 2,500 drop down to $25, 25 cents. That would be my expectation for that.
All right, let's talk some XRP, some Ripple. SEC keeps taking L's right to the face. And I wanted to use another word, but I don't want to get canceled. I don't want to, SEC loses bid to bar XRP holders from participating in the lawsuit against Ripple Labs. U.S. District Judge Annalisa Torres, I believe she will be one of the most popular. She'll probably be the most well-known judge in America here soon, because she just keeps handing W's to Ripple, XRP holders. She is allowing XRP holders to remain a part of the SEC's ongoing legal battle with Ripple, but she denies them the opportunity to assist in evaluating the qualifications of an SEC expert. However, she will allow them to file an application to brief their concerns regarding the SEC's expert. Now, if you're not familiar with what the hell this is talking about, this May, I believe his name, Rocco, what's this gentleman's first name? Deaton? John Deaton? Yeah, John. John Deaton filed a letter requesting to represent over 67,000 XRP holders. And the move was a direct response to the SEC wanting to bring in an expert to testify on what XRP holders thought when they purchased the crypto asset. So essentially, the SEC said, we're going to bring in an expert to tell you what the XRP buyers thought. And this guy said, no, how about I just bring in 67,000 of them and they can tell you what they actually thought when they bought it. And so the SEC tried to get the judge to essentially dismiss them of any mingling in the case, and the judge denied him. Motion denied. Rob, is this a big W for Ripple's case against the SEC?
I don't think so, man. Here's the thing.
You know what's so funny about you? When it comes to charts and price action, you're so bullish. When it comes to news, you're like, not really. I don't think so.
I mean, does the judge and does the judge care what the holders of XRP think? I mean, at the end of the day,
well, it's a very important factor.
I'm not saying it's not important. I'm just saying that I don't see the XRP holders being that influential on this case. I think at the end of the day, it's more cut and dry.
The backbone of SEC's case.
I know, I get
part of it is that XRP people that bought it as an investment to make money. So they're trying to dismiss 67,000 people's voices that are going to say, no, we didn't buy it to make money, which will essentially annihilate 70-80% of their case.
But if the 67,000 people know that if they said, yes, I bought it to make money, don't you think that if they came out and said that it wouldn't be favorable for their own bags, right? So obviously, even if you are some of the 67,000 people, and literally you could care less what it does, you're like, yo, I just bought this thing to make money. If you get asked in front of the judge, like, did you buy this to make money? And then what are you going to say?
But this John Deaton guy is the one that's so he's essentially the voice of the 67,000 XRP holders.
I get that. I'm just saying
so they're not bringing them up one by one.
Realistically, I mean, I'm not trying to make a case for SEC here.
Yeah, but you are, bro. You sound like a real Gary Gensler lover right now.
But look, realistically, I think most people did get into an ICO, originally bought XRP because they were trying to make some quick money. They were like, hey, man, this token, this thing's going to pop off. And so at the end of the day, I think most of the 67,000 people, I think they were actually trying to make money. I don't think there's that many people out there that thought XRP was so revolutionary that I'm not saying they're not out there. But I think if you had to put a percentage on there, I think there's more people that were simply trying to make money off of XRP than there were people advocating for there to be the replacement of the banking infrastructure cross-border
All right,
payment.
Gary. Hey, Gary.
Okay. You honestly believe? Okay, I'm curious, David. Okay, have you ever bought a token in an ICO?
Robin, I plead the fifth.
And every time you buy a token at ICO for pennies, what is in the back of your head the whole time?
Community.
Buy it now. If it blows up,
community.
if it blows up,
No, you're wrong.
I'm
Don't
going to
tell
be
me what
an
I
early
think.
investor.
No, it's not. It's, wow, I have a lot of these tokens. I'm going to use it in their ecosystem. I don't care about making money.
Right.
You're just an SEC lover, bro.
I'm just,
You love Gary
I'm
Gensler.
just saying, like, if you ask my opinion, is it a huge deal? I don't think it is, because I think the judge is going to take whatever they say with a grain of salt, because initially the early investors were just trying to turn a profit, as far as the majority of them. I'm not saying that is what everybody was doing. I'm one of those people that say, hey, I'm in this space because, you know, my whole meme coin argument is because I'm ready for this to replace the systems at B, these outdated banking systems, and all of these third-party intermediaries that are just straight taxing us to death on all of our transactions. I don't like that crap. And crypto makes it better. And so that's why I'm in this space. But I can tell you what, all the people that come up to you, that come up to me in our personal lives, and like, hey, what should I buy? Do you think they really care what it does? No.
Of course not.
Exactly.
But these 67,000 people didn't. They bought it for the tech.
You really believe that?
Of course.
All 67,000?
Yes.
Stop it.
All right, let's move on. We have a very, very important topic I need to discuss, and I'm going to need you, chat, to weigh in, okay? Rocco NFTs, let's go. Pull them up. The notorious Biggie Smalls NFT collection coming to a blockchain near you. The notorious B.I.G. has made an epic comeback on the blockchain, resurrecting his formidable self through 3,000 Sky's the Limit NFTs that additionally provide tremendous utility to their owners, granting those in the club shared ownership to a unlicensed freestyle by the rap legend. Through the collection, those with the NFT in their wallet will gain access to a gated Discord where they can vote on usage rights for the material contained in the track, the now legendary Fulton Street Freestyle. And that's what it's going to look like. Biggie Smalls. Furthermore, each NFT will also represent early access to the forthcoming Brook Metaverse. Robin, Tupac or Biggie?
Tupac, baby. God rest his soul, man. He get your
I was hoping you said Biggie, so I
died
could
over
rip
there
you
on
in half.
Koval, man. Koval and
Flamingo.
Tropicana.
Flamingo.
Tropicana.
Trust me, Flamingo. Koval Flamingo. I will literally bet 10 ETH right now.
It was Tropicana.
Money right now.
I'm not betting money.
Let's bet.
But I'm telling
Let's
you, it was
bet lunch.
Tropicana. It was
Let's bet
right.
lunch.
It was right. It was
Let's
right
bet lunch.
outside the MGM.
No, it was not. They got out of the MGM and they drove. Rocco, right away, please.
Okay.
Right away. Tupac, where did he die? Koval Flamingo. Hands down. At the light, gas station to the right. I remember the day. I was like 5. I want to know, are you Tupac or are you Biggie? All right, Tupac or Biggie? I'm 100% Tupac. 100. So much that I even know where the man died. Robin doesn't. You betting lunch or not? No, I'm right. Am I right?
Doesn't
Say it.
matter.
Yeah. Rocco, who's right? What are the cross streets, Rocco?
All right. Close. Hold on. We have to put the location.
Anyways, you guys, Biggie is greater than Tupac. Steph Curry, I am denouncing Your nickname, Steph Curry, you are no longer worthy.
So what are the options? What you guys say?
He said Trop and Koval. I said Flamingo and Koval.
You're right.
Thank you so much. Round
It's
of applause.
Flamingo Road and Koval.
That's right. Bless you. Very welcome. Don't ever question me about Tupac again. I'm a super. Still play Tupac every single day. So
Because your music rotation never changes. Play
Hey,
the
man,
same
I'm a-
songs every day.
you know what? I'm a very nostalgic.
Try
person.
discovering new music.
Try discovering new shirts. So we're why you love? Okay, so Robin, what are your thoughts on this unlicensed freestyle from one of the biggest rap legends, Biggie, in the history of rap? Is this something you would invest in?
It's just JPEGs, right? Essentially.
It's what I'm.
But what I'm saying, it isn't actually tied into this music, right?
Correct. So if you hold, it's like a card, like you know
Yeah.
what you showed yesterday, key to the. But hey, man, this is something. It's an unlicensed freestyle, so the license will go to this NFT, and everyone who has it, the 3,000 people, will have shared ownership, and they'll be able to listen, and they'll be able to decide how the material is going to be used and how to monetize on it.
I think they're grasping at straws for monetization. I think I don't know. I feel like it's a money grab and not necessarily a tribute to Biggie. You know what I mean? Don't you agree? Don't you feel like it's family members that are entitled to royalties and
Well, they're
and
going to
his
get
name, like-
theirs. They're going to get theirs.
No, but what I'm saying is, like, I think it could have been done a lot better.
Here's the thing, though,
And I
bro.
think if you would have,
Like, imagine you're the mom or the dad or the sister, brother. Your brother, your family member's legend continues to live on generation after generation, and now
I'm not downplaying that.
it'll be cemented on the blockchain. No ifs, ands, or buts.
But they
about it.
could have did it better. That's all I'm saying, man.
In
Is
what
that
way?
instead of JPEGs that give you part ownership to one freestyle,
Well, and the whole metaverse thing, right? The Brook metaverse.
don't
Early
even get
access.
started with that Brook metaverse. Like, yeah, I want to. Okay, here's the thing. Like, let's just say we're gonna do one on Tupac, for example. You know, how about you know, the record label work with the songs that they have and then do some kind of NFT ownership of different tracks or albums, or perhaps a dedicated album with a mixture of songs that you could have by purchasing the NFTs. Also, maybe some behind the scene, maybe like some little video clips of you know, kind of how they have top shots, video clips of the actors, you know, because they did like some movies on Tupac after his passing, like entire movies. You know, he was obviously
They did one on Biggie too.
yeah, and so I think, you know, there's so much that you can implement into an NFT and so many different directions you could take it to simply just, you know, put out a bunch of JPEGs and then just tie it into one freestyle. I think it's underperforming the potential, especially for such a big icon. I think that if you structured it right and you really game planned it and try to figure out what is the best value we can create for the user, I think that's the proper way of going about it, instead of simply just trying to tie one piece of utility that, you know, at face value kind of sounds
But you don't
cool,
know
but it's-
what it can grow into.
I get it. It can grow, but here's the thing: why not make it grand from the beginning? Why freaking launch something half-assed that you know, instead of doing it right the first time and being like, hey man, we really want to cement this man's legacy. We think the NFT is the best way to do it. We want to take the community that he already has and we want to shift them over to this NFT. And this is what we're going to give you as far as value and what is so unique about this NFT drop. And I'm not seeing it, man.
So Strictly Sports, because we denounced his nickname on the channel. He said they had a Twitter space. These are the families behind it. They love the idea, everyone. So it's getting a lot of positive feedback. I think it's great.
I think it's
And I think you're jumping the gun. I think it could be something great. We don't know the full ins and outs, just from what I haven't dug deep into what exactly it's going to do and the future roadmap. But it's from everything I've read, sounds pretty cool. I mean, an unlicensed freestyle. I mean, it's a freestyle. You know, those are a little more personal. Not something you take time. You know, so no one else wrote it for you. Technically,
Yeah.
And then last thing I kind of want to cover. So we talk a lot about ETH NFTs. Well, here are the top Solana NFTs over the last 7 days per volume. You have Fruits NFT, 57,000 Solana volume over the last 7 days, currently down 2.5% over the last 24 hours, 7,800 items. And looks like this was minted. Come on. Okay, I guess. Anyways, looks like this was minted maybe 7 days ago. So, I don't know. Would you buy one of these?
No.
It looks like Cool Cats. It looks like a copy of Cool Cats. I don't like copies. I don't like when you try to bite off another thing. That's why I like Disco Kitty so much. That's why, you know, the Subducks are cool. They did their own thing. But stuff like that literally looks like Cool Cats, but on Solana, and you give it a different name. And then Degen Fat Cats, that's down 50% over the last 24 hours, but over 14,000 in volume over the last 7 days. Floor price sitting at 20 Solana for 20,000 items. Wow.
You know, those,
And it looks like they're not revealed yet. So
the ones you showed before, they kind of remind me of the
fruits.
Yeah, there was another one. It was like
Here, tell me.
beans or something.
Here, you see these? These
Yeah,
look-
beans. You pull up my laptop. It reminds me of these right here. So the beans kind of remind me of the fruits thing.
Here, doesn't it look like this too?
These are the beans here. These
No.
actually are.
No, it's more like this one. Look, pull up my laptop. Rocco's over here flipping the laptop right here.
Yeah.
So derivatives, I'm not a big fan, especially when it comes to NFTs. Got to be
You
original.
don't like
gotta
the
be
beans
OG.
though? I was looking at these the other day.
I mean, I like eating beans, and
I don't like you eating beans.
you know,
It's a small studio, put it that way.
people in restaurant industry, right? People that have a background in hospitality restaurant industry, we typically don't have filters. We're very lewd people. And so a lot of things come to my mind during the show that I just cannot say. And I am so proud of myself for not getting us canceled this far. Robin, I will extend that proudness onto you as well, my friend, and Rocco as well. We all come from the restaurant industry.
I am so glad you're proud of me, David.
Rocco, roll the outro. I'm done with this guy. All right. Huge thank you to Dan from the Chart Guys for joining our show and blessing us with his knowledge. Please make sure you go support. Go subscribe to his YouTube channel. Go follow him on Twitter at Chart Guys. On behalf of myself, Robin, and Rocco, tomorrow's a big day. We have our main man, Forrest from Crypto Stackers, back on to do our Market Watch segment. Make sure you come back tomorrow, 10:30 a.m. Vegas time. On behalf of my Robins, I'm Robin the Rocco. We'll take it later, peace.